Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is Don Durrett of goldstockdata.com for our monthly interview. How's it going, Don?
Hey John, let's do another one.
Don, you know that I'm starting my second conference of the year down in Florida, and you were nice enough to attend at the Four Seasons, Fort Lauderdale. That's going to be held October 20 through the 22nd. You and I are both going to be speakers at this on the 22nd in the morning. Do you do these conferences regularly? I know you attend Beaver Creek, but do you attend a lot of these conferences?
No, it's pretty rare for me to attend a conference. So yeah, I do Beaver Creek every year, and yeah, this probably would be the only one for the rest of this year.
Fantastic. Well, I'm excited that you're coming, and I don't think you get enough credit in the space. You bring so much to the table, and you help so many investors. I think your website is just phenomenal, and people that are looking for gold and silver research in particular should be looking at that subscription. Being what is it now, 199 per year?
Yeah, for the entry, two ninety nine for premium. One thing
Okay,
about the conference, the retail investors have to pay $600, but
yeah,
the presentation that I'm going to give is going to be very, very valuable. People are going to get their money's worth, basically bang for the buck.
yeah.
I'm going to actually go over how to analyze short bullets, explorers, developers, and producers, all what you need to look for. So it's
Okay.
basically going to be very condensed version of my book, but powerful information. So people that attend they're definitely going to get some bang for the buck there.
Yeah, and I should point out, as someone who's co-hosting this, we're not going to charge that 599 to an investor if they're accredited and if they take one-on-one meetings with companies at the event. So please, feel free to email me guys directly at john.fennick@yahoo.com. You'll see all the contact info I have at the very end of this presentation today, but would be very much interested to get some of you retail investors there. I think this is the exact right time you should be looking at our sector, and we'll talk more about the macro here in a minute. Lastly, the website for the conference is topshelf-partners.com. Just click the homepage and you can see investor registration right in front of you. So Don, let's kick it off with the macro. We only have about 20 minutes today. What are your thoughts here with gold above 2,500, that big round number, and what do you think is going to unfold here for the rest of the year?
Well, I want to start off as saying I'm very negative on the economy. I mean, I actually think that gold's been following the stock market higher, but I think that gold is really the leader here. Gold's telling the true story, and the stock market isn't. Now
Hmm.
everybody looks. I mean, today, everybody's looking at these numbers in the economy, and they're very, very, very positive. Now we got a GDP revision from 2.8 to 3 last for Q2, and they said it was because of consumer spending. And everybody's looking at these positive, numbers. Today we had the jobless claims that came in at 190, which is back in the norms. They're like the consumer's fine, jobs are fine, GDP's fine. But I mean, the biggest number is the stock market. As long as the stock market is up, everybody thinks everything's fine. People think the stock market is the economy. But and then everybody thinks, well, the Fed's going to lower rates. They're going to start lowering rates, which is going to push the stock market up, push GDP up, so-called soft landing. And I'm just totally not in that camp. I just feel a rug pull is coming. As a matter of fact, I haven't been on the sidelines. Like every month, we usually get paid the first of the month, right? So that's just normal. So the first of the
Sure.
month, I usually buy stocks, and I haven't been on the sidelines. I don't think in 4 years. Sometimes I might hesitate a little bit. I mean, we had one run kind of up to this level, 325 once before, and then went all the way back down to 200 on the Hui. I don't know if I was buying then 300, but I never really put the brakes on, if you will. But
Hmm.
I put the brakes on for this month. So we're heading into August, heading into September. I do not plan to buy any stocks September 1st. I had the brakes on. I'm waiting for the rug pull. Um, I might buy something after Beaver Creek if I find something in Beaver Creek I like. If when I'm at Beaver Creek, I might buy something. Last year I did, so it's possible I'm going to find a stock or two at Beaver Creek. But on the whole, I think that now is the time to slow down. Like I had an email from a guy today. He was selling stocks, raising cash because he feels the rug pull's coming. So I think that gold's going down. I think the stock market is peaking here. I think maybe we get to 5,700, maybe we get to 5,800, but I just think it's peaking here and it's going to roll over. And the key number is 5,200. That's the key level, 5,200. It needs to hold that. As long as the stock market holds 5,200, I think everybody remains bullish. It's like, oh, it's another correction and we're fine. But we just had a dip. We just had one 2 weeks ago. So if we get another one soon, people will start to get more nervous. And so last time we went down 51 something, we didn't go below 5,100, but it was an intraday and it went down to 51 something, like 5,120.
Yeah.
Bounced right off of it. It really, and then it closed the day above 5,200, which is the important level. So if we close below 5,200, I think that's it. I think that's the end of the bull market. And so I think we're in this tight range right now. And so there's a lot of risk buying, getting the falling knife here in the miners, because I think gold's going to go down 10%, somewhere around 5 to 10%, but right around 8 to 10 is probably a more realistic number. So if we're at 2,500, you go down 10%, that takes you to 2,250. So 2,250, that's about my target area, plus or minus $50. And that's going to take the Hui down somewhere between, say, 250, 265. So that's a pretty decent rug pull. And so I'm just gonna wait for that rug pull now, because like I said, I'm very bearish. I just don't think the economy is going forward here.
Mm.
And historically, I mean, we can talk. We will. I'll give some more reasons why I think the economy is weak, but I I just think that the next say the next month or two, I think we're going to get a rug pull.
Okay. Well, I've always seen August and December in particular as months that you can accumulate stocks when other people are asleep at the wheel. And so, like, I've been buying a lot in August here, but not on anything fairly valued or growth oriented. I've been buying all value plays. I bought, Silver X, we talked about just off camera a minute ago. It's at, under 15 cents. It's like, sure, there's risk there, but I like Peru. I like Jose. He has a lot of skin in the game, blah, 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 right? So, like, there's stocks like that that you have to be adding to on dips like this, because the technical low on that stock has been about 14 cents US. So when you can get it between 14 and 15 now, it's holding support, right? If it went to 11, I'd be a little worried, right? But it's not going to get there, I don't think. As long as silver holds 26, I think we should be okay. That seems to be the big round number in the sand that we couldn't break through last year, that we did break through with a lot of authority this year. And I think you saw that recent pullback done in silver where we didn't even get close to 26. Honestly, we got to 27-ish, but we didn't really test 26 in any meaningful way, which is positive, I think. So I see it a little differently. I think like the big caps, like Agnico here at 83, might pull back a little bit, but stuff like Newmont at 51, 52, Barrick had a really good quarter, GOLD. I think some of these names are going to catch a bid sometime in, between September 18th Fed meeting and the election and or year end, right? So somewhere between September 18th and year end, you're going to get another buying opportunity. To your point, I just don't see the Huey going back to 250. And I hope I'm right. I think we're going to make a higher low. And the stocks that I'm following are pretty constructive in the producers, not so much in the juniors, which is where your real value lies right
Right. Well, I was buying aggressively the first of the month. Like I thought,
now. Okay.
I have four optionality plays, like you mentioned, Silver X. So there are a lot of companies that are still super cheap, kind of ridiculous cheap, like Southern Silver and Free Gold Ventures, Banyan. I mean, these stocks are selling for, Southern Silver is like 25 cents in the ground, silver.
Right.
Free Gold and Banyan are under $10 an ounce in the ground. Just kind of, silly valuations. So yeah, we're seeing a lot of that. But I'm just giving the people that are watching, just giving them a heads up that a rug pull is very likely coming in the next 60 days. And so if you're buying now, or if you're looking for opportunity for entry, I think that's coming. I think we are going to get a new cycle low, I think, for the year, but I don't think it's going to be super deep. Like you said, the Hui holding 250, I think that's very, very likely. I think $2,200 gold, 250 Hui, I think those are kind of floors. I don't expect to retest 250. I think that those are kind of the
Okay.
floor, but I think it's going to be more 270 area.
Yep.
If we hold 280, I'll be really surprised. That would shock me. I don't think 280 is holding here. Um, and when the rug pull starts to come, and but it's going to get dicey. We're going to think that 250 is going to get taken out, 2,200. It will get dicey when we start seeing these, because you're talking about a pretty big down move in the markets. It's going to be tough. It's going to be tough. I mean, a lot of people are very, very, very pessimistic about the miners holding here. They think that gold and the miners are going to get obliterated with the market. But me and you both, we see that gold is in a bull market. It's very rare for a gold bull market I don't think it's ever happened to take out the 50-day moving average or 50-week moving average. It's one of those. It's like it's never happened before. Once you get in a bull market, the only way those things get taken out is the bull market ends.
Right.
And and I just don't see the gold bull market ending right here. It makes no sense. So you can put two
Yeah.
and two together. That's never happened, and we're in a bull market. So that tells us we have a floor. We have a floor underneath us here in gold and the miners, which will hold up silver as well. So I remain super, super bullish on gold, precious metals heading into the end of the year. But I'm totally negative on the economy. So if I'm totally negative on the economy, you got to expect that rug pull. Um, so I'm going to hold off. Now, what I should be doing is I should be raising cash here. I should be selling stocks that are made big moves. And I have like 5 of them that I should be taking some off the table, raising cash to get ready for the rug pull. But I haven't done that yet. But I'm thinking about it. It's in my head. I should be raising cash right now, which is what a friend of mine did. Um, yeah. You mentioned Newmont. I want to say something about Newmont because I think it's a market leader. I think it's really a big indicator, and the Hui. This week the miners were down all 3 days, all 4 days. Monday, Tuesday, Wednesday, Thursday. The miners have been down. We started the week above 320. I'm not sure where we were, but we were above 320 on the Hui on when we opened on Monday, and today we're at 315. So we bounced a little bit today, but we're down for the week. Oh, I'm sorry, we're up today. We're up. I'm sorry, we are up
Yeah.
today. We're down for the week, and gold is at 25.24. And silver's at 29.41. Well, that's what I had this morning. It hasn't closed. That was the number I got this morning. But those are solid numbers, really solid. But the Hui isn't doing anything. So I mean, if we look at the Hui, as far as being in a bull market, if you will, the cycle high in 2020 is 360, and we're under 320. I mean, this isn't a bull market in the miners yet. We've seen bull markets in miners, and you don't see down weeks when gold is at these levels. And say margins. The margins are fine at 25.20. You
Oh,
mentioned some
sure.
earnings, Newmont and Barrick. These companies are making money, but nobody's buying them. But if we look at Newmont's chart, I mean, it's up, not quite. Let's just use round numbers. It was a little under 30 in February. So 30 to 50 is a 40% move. And yesterday was at 51.50. Today it's up $1.50 to 53. So you would think, I said, we need 55 on the Newmont before we start thinking, okay, it's off and running. We're kind of retraced and now we're going to go back up. That is in tandem with a 325 HUI. So those are we're approaching those levels. We're just below them.
Yeah.
And right around 340. So I think that get above 325 on the Hui, get above 55 on Newmont, and you're really starting to get excited. And then above 340 on the Hui, I think we rip to 400. That's when everybody takes notice. All we've done so far is just retrace. We've just done this retrace. But you look at these charts, I mean, Newmont, I can give you some numbers here. In 2022 was trading at 84. Today's at 53. So
Right.
it's still super early. It was trading at 73 in 2021.
Mm-hmm.
So, and we're at 53 today. So we're still just retracing. We're still early innings. We haven't even caught back up yet to where we're actually kind of now we're moving kind of thing. So I was doing the numbers on Newmont last night, and Newmont, if you look at where it's going, if you will, if gold goes to 3,000, it 3x's to 150. So gold goes 500, goes up $500. This thing's going to go up 3x. I mean, it's got that kind of leverage. And the reason why it has that kind of leverage is because it's still just retracing here. It's got to go all the way to 80 just to get back to where it was at 2 years ago. And then it's going to rip to 150.
Yeah.
And so we're still early, but again, you got to be careful here because of everything I said about this economy. Gold is following the stock market higher. It's just following it higher, but that's very misleading. You think, oh, because the reason why is because there's going to be a decoupling event. Unless you believe that, I mean, unless you think that the stock market is going to go to 7,000, I mean, then buy these miners because they're going to rip with the stock market. But the chance of the stock market doing that is pretty darn low, and the chance of yeah, we'll get into that. The reason why I think the rug pull's coming.
Sure. Well, we only have about 5 to 7 minutes here. So what would you like to touch on?
Yeah, the economy. Let's both talk about why I think that basically the rug pull's coming. I think that's an important topic. You can go first.
Well, I've been saying, since May that I thought the September 18th Fed meeting would be pivotal, and that between that and the November 5th election, you'd get a lot of volatility, right? Just a generic statement. And I still stick by that. I stick by it even more now because we've got Biden out of the race and Harris in the race. That was said in May multiple times by me. And then you had the assassination attempt on Trump in July. You had the change from Biden to Harris in July. There's just so much that can go wrong. And we don't even know any of that yet. This is all back and forth talk right now, right? Like very little solid stuff you can hang your hat on until September 10th when they square off for the first time. That's when you're going to get your first look on national TV about how Harris can hang with Trump. And I don't, I'm not, I think both candidates are, um, have strengths and weaknesses like any candidates, but this is very unusual when you go back. You're a historian, Don. Go back in history and find me something like unusual like this. I have never seen it. The difference is what we were dealing with in 2024 versus previous elections is social media, is the web, right? Like all these people are talking and chatting, and that's what drove Biden to where he is right now, which is on the sidelines. I mean, if it wasn't for all of the negativity, he may have hung in the race because they just didn't prepare him for that debate, right? I mean, like he looked awful. He blamed it on his health. He blamed it on a flight. I mean, like it was really just disappointing for the American, for us as Americans to see like that happening. But then having Harris step in like this, and apparently she's a couple of points ahead in the polls according to whoever. We'll see. I mean, September 10th will be a really interesting first look, but then you only have less than 8 weeks before the actual election. So I think there's going to be a tremendous amount of volatility between the 10th and the 5th of November. And I'm going to leave it at that and pass it to you.
Yeah. So on the politics, on the political side, I think Biden was totally set up. I mean, why? There's never been a debate in June ever in our lifetime. I think
Mhm.
his team basically set him up. They basically put him in that debate knowing he would look bad so they could get him out. I totally think, I mean, why would you have a debate in June? They just told him we're having a debate in June, and I think that's how the Biden administration has basically been throughout his administration. They've just been telling him, okay, go stand over there, go say this. I mean, look what happened after he dropped out for the last 2 weeks. He hasn't been in the White House. He's like, heck, I haven't been doing anything for 2 years. Why do I need to be there? Right? So I think he was totally set up. He was, and so now let's go back to the economy. I also agree with you. I think this is historic. I think Q4 is going to be wild. I think that basically I think Harris is going to win for a number of reasons, mainly because I just see history repeating itself. Everybody says that Biden got 81 million votes because people hated Trump. And I'm like, I I I don't buy it at all. I don't think he got nearly 81 million. So if he didn't get 81 million, where do they come from? So I think that's history is going to repeat. I think it's going to be very similar, very close, and somehow
Right.
Harris is going to win. Okay, so we've been and I think that's very detrimental to the economy because she is more left than Biden, and she's actually, I think, more left than Bernie Sanders. She's the most leftist president we're ever going to have, and it's a big slippery slope of where America's trending, and I think it's going to scare the hell out of people, basically. And when she does win, I think she's going to scare the hell out of the markets, both prior to the election and after the election. I think this is the most wild event that we've seen. Um, this is historic as hell. Let's put it that way. Okay, so let's go back to the economy on the reasons why I'm so negative. On top of the election, which I think is going to create huge uncertainty, but we've been in a 15-year bull market, people. In
Right.
15 years. This thing started in June of 09.
Oh nine.
15-year bull market, and people think it's just going to go on, go on, go on. We had
Have you?
to,
Let me ask you a question on that. Have you ever seen anything in history going back? You follow markets back to the Depression. I can't find anything like this. I mean, I was in the field in '99 into 2000, working with financial advisors all day long, 70-hour weeks, and I remember AOL and the craze in tech. Right? I mean, this doesn't even. This is like 2x that type of euphoric behavior to me.
yeah, Jeremy Grantham. Everybody's ignoring this man. He is the ultimate economic historian in this country. I put him at the very tip top. And he said that this is the most vulnerable market he has ever seen. And he's seen a lot of them. And so, yeah, I absolutely agree with it. And everybody's like super optimistic that the Fed's going to lower rates and everything's going to be fine. This is a 15-year bull market, and they're trying to land the plane in this thing. I mean, I just say there's no chance. And I think that once people realize what's happening, and then we have this unbelievable leverage in the system. 20% of the corporations right now basically only are existing because banks are allowing them to exist. In other words, they're not profitable. They cannot pay basically their debt payments back unless they roll over the debt. 20%, it's a massive number. If you look in the S&P
Sure.
500, half of the companies are losing money. They're in recession. If you take Walmart and you take Walmart's profitability out of retail, the rest of retail, all of it is losing money.
Wow.
It's unbelievable. So, I mean, if you look at, then we have high rates. If you look at the housing market, like last month, they said, oh, we have 10% increase year over year of new home sales. Well, new home sales are doing okay because the inventory is very low. It's super low for the other ones, but the existing home sales came in last month where it was negative. So you're getting cross currents. But on the whole, I heard that this guy, he's basically been, top-notch real estate guy, but he doesn't sell new houses. He sells, all the existing homes. Somebody wants to sell their house, they go find a good realtor. He's a good realtor. He said this is the worst in his life. This is worse than, when we had the housing crash. It's so realtor. And so if you're selling cars, if you're a car salesman, the foot traffic, it's this is not a strong economy, is my point. There's a lot of wobbling going on. The cost of living is impacting the economy in a big way. I mean, the average family cannot pay their bills right now, and
Yeah.
that's not going to improve.
Don't you think that's partially on them though? I mean, when you talked about the consumer spending numbers going up, I mean, most people are just putting it on their credit card. That's why we're seeing consumer spending hanging in there at all, don't you think?
Yeah, but they're reaching a stretching point. But the key here is this, is that costs are not going down. Yeah,
Hmm.
they're not going up. They're still going up, 3%. They're still going up. But this big push up like utility bills, rent, groceries, insurance, services, everything has went up significantly,
Yeah.
but their income hasn't. So people are behind the eight ball. They can't catch up. They're getting squeezed more and more and more, and that's not going away. Rent turnover right now is at recessionary levels. It's like the economy, if it's not in recession right now, it's in recession for a lot of people. It's in recession for a lot of groups. It's not, my point is this, is that it's not getting better right now. There's no green shoots. And everybody has this belief that they lower rates and everything's going to be fine. Um, it's going to take at least a year to get rates down 1% or 1.5% because they're not going to lower rates 50 basis points a pop. I mean, in theory, they could get it down 2% in a year. Well, they could get it down faster than that, say 9 months. But 9 months, the economy is going to have to basically hang in there for 9 months because the initial rate cuts are not going to help that much. Um, uh, and then that lag effect, we always said there's going to be a lag effect for the high rates, but that really, we haven't seen it. We haven't seen it. We haven't, the GDP has not went down. We
Right.
haven't really had that lag effect, which I think it will come. The inverted yield curve, um, and I'll stop on this because we're running low on time, but the way the inverted yield curve works historically is it indicates a recession is coming when you have
Yeah.
and this has been an extended inverted yield curve. And then the recession doesn't come until it reverts, which is currently happening right now. In other words, the inverted yield curve, what it does, it's happening as we speak right now. As they lower rates on the short end, it normalizes and reverts them back. And that's what's happening right now. That's when the recession begins. So I just back to my earlier comments. I'm just very negative on the economy. I just think we're going to get a rug pull both in the stock market, gold, and the miners in the next 60, 90 days. But I think 60. All right.
Okay. Great summary there, Don. And if you want to hear more from Don and I, we're going to be at that event October 20th through 22nd down at the beautiful Four Seasons, Fort Lauderdale, both speaking on the 22nd of October. And you'll see my contact info at the very end of this. And feel free to reach out to me. Or just go to topshelf-partners.com and you'll see the registration right there on the homepage. So we're going to introduce Sandeep here from Western Copper and Gold. The ticker in the US is WRN. Sandeep, welcome to the show.
Thanks, John. It's good to be with you. I didn't want to interrupt that conversation with Don. Don, how are you?
Nice to meet you, Sandeep.
Good to be with you. Can you guys hear me okay before we launch into this?
Yes.
Okay, great.
Yeah. So, Sandeep, if you'd be kind enough to just give us a 10-minute overview and then we'll ask some questions.
Sure. And I'll pull up a few slides to do that. Just bear with me.
Sure.
There we go. Are you guys seeing that now? Maybe a bit blurry, but
Yes.
it'll come into focus. So I am Sandeep Singh, the CEO of Western Copper and Gold. We've got a large copper gold porphyry in the Yukon in Canada. Sometimes we're Western Copper and Gold, depending on the day. We could be Western Gold and Copper. We have a significant amount of both of them. And as I give you this update, I'll be making some forward-looking statements. So please be mindful of that. I joined as CEO about almost 6 months ago exactly. And what drove me to, and it was a story I knew for a long time. I'd known the project for a long time, held the royalty on it for a while, so knew it in depth technically. And I felt like it was a project that had found its moment. You know, these big mining projects, sometimes they can go through periods where they're not in vogue, where the slow, methodical, technical progress is not necessarily getting reflected in the market. And that for this project was the decade really of 2010s. You know, wasn't a lot of equity available to the company. They did the right things. They protected and preserved shareholder value whilst doing the right things technically. And then in the last several years, I think momentum really built. You know, the resource, or at least the M&I portion of the resource, which is significant, doubled in size. They went back from PA to feasibility study in mid-2022, so still a very current, very economic feasibility study. Attracted Rio Tinto and Mitsubishi Materials as equity holders. Rio Tinto owns just under 10%. Mitsubishi owns about 4% of the company. Now I'll talk a little bit about their investments, but you know, a lot of positivity, but yet still wasn't being reflected in the share price, still isn't. And that's what attracted me to it. And you know, that's kind of what can happen during those lulls. You know, in the 2010 decade, copper went from 450 to 250, pretty much in a straight line. Gold was retracing as well. You know, big projects and small companies didn't exactly get attention. And once you fall off the radar screen, sometimes it takes a little bit of a catalyst to get you back. And that's what we're in the midst of. I touched on those investments, so not to belabor it, but Rio Tinto has put money 5 separate times into the company, 5 separate times into the company. Every time they've had the opportunity to, they've maintained their stake, and almost $40 million invested over those 5 investments. Mitsubishi Materials, another great partner, very supportive. Both are very active and have been on our technical committee. So, you know, I think we benefit from that more than possibly they do. And as far as we can tell, I think we're the only time Mitsubishi Materials has invested in the equity of a junior company. So great partners, great support technically, and haven't given away very much in terms of the farm, if you will, or in terms of rights that they have. And those rights tend to expire within the next year as well. But certainly our relationship with both groups has been great. I won't bore you with, you know, my thesis on copper and gold, but I'm sure we'll get into it in the Q&A. I think, you know, the mix is an important one, though, for a variety of reasons. You see, you know, we've got 11 billion pounds of copper, roughly 21 million ounces plus of gold. Most of that is in the measured and indicated category, so quite well drilled off, so safer from that perspective. And I think that mix of, you know, depending on the day, you know, almost half copper, but a significant amount of gold, and then moly and silver, is the right mix for these long life assets. You know, I'll talk to you about our mine life. It's 27 years based on the feasibility study, but conceivably quite a bit longer. And if you're building these long life assets that really have to be built by senior companies, we're not pretending we have the wherewithal to do this. You know, they need to withstand cycles. And I think the natural hedge that the gold and copper kind of provide is you know, not smart, just happens to be the case, but I think it helps the project in that longevity. Personally, I think the outlook, maybe not near term for both, but certainly medium and long term for both, is exceptional. The other thing it does for us is, you know, we have, you know, I mentioned Rio Tinto's on the roster. We have copper companies that are interested in us. But if you get to a certain size in gold, you really need copper for growth as well. You know, we've seen the major gold companies grow leaps and bounds through M&A, through large mergers. We've also seen them grow significantly through share price appreciation in the last run up. And you've seen all of them basically either take big steps into copper or start to dabble into copper. Because again, after a certain point, you know, the gold assets that are out there just don't move the needle for them anymore. This is one slide that I think, with a bit of narration, tells you a fair bit about the project. So what you're looking at is a cross section here. This black outline, hopefully you can see my arrow, is the reserve, is a pit. It's one big open pit. That's 27 years of mine life, and it's got a little heap leach component on the top of it, but the crux of it is this mill reserve. So 1.2 billion tons of 0.4 copper equivalent with the mix of metals I showed you earlier. Importantly, that's at a 0.43 strip ratio. So, you know, if you look at our strip adjusted grade, we're kind of better than most of the things out there. So very low strip ratio. You're mostly in ore the entire time. Long life asset, 27 years based on the feasibility, but it's only a third of our resource today. So, you know, one of the things that happened to this project from the last time many people looked at it is it got very large. So the longevity of it attracted, I would argue, that senior company interest. The other thing that happened is the payback quickened. Within that reserve, there's this core zone. You can see the hot colors there. And the numbers are on the next slide, but it's 430 million tons of almost 0.6 copper equivalent. And the strip ratio is actually 0.25, so basically negligible. And it's at the front end, it's the top of our deposit. So during the first 4 years, based on the feasibility, that core zone spits out almost $1 billion Canadian of after-tax cash flow per year. So despite having a meaningful capex, which typical for copper projects, copper gold projects, the payback is about 3 years, 3.5 years, using 360 copper and $1,700 gold. So that combination of de-risked, very quick payback, and then decades beyond that of mine life, coupled with very clean metallurgy, which is, I don't mind saying, what attracted Mitsubishi to the project, low elevation in Canada, all that together, this is one of the very few viable projects out there in the world to build. And when you look at the time frame for this early next decade, frankly, there's not a lot that comes on before then. If there isn't a shovel in the ground on these mega projects, it's tough to see where that additional production is going to come from much before then. So all that taken together is the opportunity that I saw, and what attracted me to Western Copper and Gold. I'll touch on the economics next, and then maybe pause thereafter to have the discussion, guys. This is just maybe one more interesting slide. I like this slide.
Sure.
So I'll spend 30 seconds on it. This is a blow up of that core zone I just mentioned. This is drilling that Rio Tinto wanted to see when they joined in 2021 to confirm that that core zone really does what it's supposed to, which is underpin the payback. And so you're looking at 290 meters of 1% copper equivalent right from surface, very consistent. 66 meters of 2.5% copper equivalent right from surface, pretty consistent. Historically, we had a hole of almost 700 meters of 1% copper equivalent from surface that ended there. So there's a pretty special part of this deposit that honestly, I would argue, is on a standalone basis better than a lot of things out there. And for us, it's just our starter pit, if you will. Jumping ahead, here are those economics from the feasibility study. A lot of numbers here, but if you look, you're looking at 360 copper, 1,700 gold. That was the baseline, believe it or not, only 2 years ago in the feasibility study. 2.3 billion, of NPV, Canadian dollars, 18% IRR, that 3.5-ish payback period. If you start to, which I don't think very many people are using anything below $4 for copper, and it's nice to have a scenario where even our high case for gold is below the current spot price, 2 years later. But if you start updating for commodity prices, you can get to $4 billion of NPV very quickly. Caveat that with the fact that this is all done at an 80-cent Canadian dollar to the US dollar. That's out of date. You update for that, you're well north of 4 billion, depending on your assumptions. So add to that the fact that I tell people, NPV is the wrong type of metric to use for these projects, these long life projects. Nothing after year 8 or 9 in a DCF calculation hits your NPV your number, but they matter. So these are the types of long life projects that will have the same NPV every 10 years for the foreseeable future. But that's the way to think about those projects. So again, a lot there. All I will say is, regardless of your commodity price assumptions, your FX assumptions, your timelines, no matter what layer of conservatism you want to build into your thinking, there is a very significant multi-billion-dollar project here, good economics, getting better, and yet we're trading at roughly a $300 million Canadian market cap, so less than 0.1 times that NAV. So the prize is huge, and the optionality to those big tons and pounds of copper and gold, even more special. So the way I distill it in my mind is try to keep things as simple as possible. What we're looking at is a very long dated, already in the money call option. It's long dated because I should have mentioned we have $77 million Canadian in the bank at the end of the last quarter, end of June. So we have the runway for several years. So long dated call option, in the money because it works at 360 copper and $1,700 gold, but it gets much more attractive as those numbers start to creep up. And it's call option on gold, it's a call option on copper. It's a call option on Canada being one of the places where, ESG focused miners are going to want to build these types of long life projects and feel safe doing it. We've seen the opposite play out in the mining sector. And I think that scarcity value will come into to focus. We're going through the permitting part of this, working on our environmental assessment. We think going through that process unlocks a significant amount of value, and that's what our focus is going to be. And last thing I'll say is the infrastructure piece continues to kind of strengthen and improve behind us, where we have federal dollars in Canada going towards our road. We have territorial dollars going to help secure port access in Skagway, and we have concepts around potential grid connect to the hydro grid in British Columbia, to the one in Yukon, which could be another game changer for the project. So again, I keep saying I'll pause. This time I mean it, but a very important asset. People throw around world class. I shy away from that. I think it's globally significant, and hence the attraction from some of those major groups. It's in the right place. We've got the team to move it forward, and we're funded to do it. And we're looking to grow the tent of people that talk about us, cover us in research, own the stock, and that's Western Copper and Gold.
Great, thanks, Sandeep. Appreciate you keeping it to 10 minutes too.
Did I manage? I don't have a clock
Yeah.
on either. Okay.
Yeah, that was nice.
The internal clock was going.
Could you swing to a capital structure slide?
Yes, bear with me.
Okay, so I can't read the far right, but if you could just read for us, Rio's position is what, 9.7?
Does that help? Is my face here in the way?
No. It's just there it is. Perfect.
Okay. Yeah, sorry, I should have fixed that earlier. My apologies. But yeah, look, we're sitting on, as I mentioned today, about a $300 million market cap, 200 million shares under, basically all told, a bit more fully diluted. Rio Tinto 9.7%. Mitsubishi's around 4%. We have some other significant institutional shareholders that you see on this page. Many new ones that came into our April financing that aren't on this page because they just haven't disclosed. So that's part of the job of growing that tent of people that are paying attention. And I don't mind telling you that when we raised that money, a lot of folks hadn't looked at Western Copper and Gold in a long time, if ever. And these are people that are kind of mining specialists, so in the business day to day, and bullish copper and gold. So I do think there's an audience out there that we can go that haven't heard this story, and appreciate yours and Don's support in helping that today.
Sure. So let's see. With the breakdown at 46% copper and 34% gold, how does that differ from some other projects in your region? And secondly, when you look at the kind of money that WRN mining has brought in Canada, are you looking to do something similar where you find an equity partner to fund the capex, or because you kind of alluded to the fact that you're not going to build it yourself?
It's a good question. It's a good question. So look, all these projects are a little bit different. The commodity makeup, I quite like our split, as I said, for a variety of reasons. I think, especially when you think of these long life assets, having a bit of that natural hedge in there is positive. I think the outlook for both is exceptional. The last run in copper perhaps was a bit too much too soon, from 4 to 5, especially when, China's on its back foot. I caught a little bit of the tail end of your conversation with Don. The economy overall very suspect for the next little while. But if you see through that, I think there's still a huge scarcity of these projects, and ultimately, groups that build them have to make decade-long investment decisions. So you can't exactly choose your timing. But I think the world needs a lot more copper if we're going to continue to see electric vehicle penetration, just electrification, period. If the AI race, and make no mistake, it is a race between the West and the East, and one of the few races that the West is currently winning. But that's going to be an interesting kind of dynamic to watch. The world's just going to need a lot more copper from electrification, just from normal growth perspectives. But I like that combination for us a lot. I like the copper and the gold. It also creates a lot more opportunities for us in terms of the exit. And on the exit, like again, we make no bones about it. This is not a 4N where 4N did an exceptional job. They had the wind at their back. They brought in a lot of key partners, and they had a project that they could tackle. The market cap, the capex made sense, and they're on the way to kind of creating that value. That was a moderate size underground copper mine, copper zinc mine. This is a major company project, and our team, 20 some odd people is not going to be the one, even if it changes materially over the next several years, to take something like this on. Our standalone plan, nor do we have a for sale sign on the company. Our standalone plan is we can create a lot of value with the dilution that we've already taken to get the cash balance that we have on the books, to move this through to the next wave of the next threshold in terms of progress. I mean, if you look at the 4N story, I mean, it was not a dissimilar story where it was kind of out of favor for years. It held back, it preserved value, they didn't overly dilute. And then when it was the right time for them, when they were closer to permitting, things started to happen, things started to kind of work. You see, you talk about the Lassonde curve often in mining. You tend to get excitement and sometimes over excitement in the exploration phase and the resource delineation phase, and then you tend to get apathy and overshoot the other way in the trough. That's just normal course. We're in that trough in terms of development, but the prize to the other end is fantastic. And we don't have to get lucky and find a deposit. We already know we have one of huge merit. So de-risking it is the right thing to do. And if we can go from where we're sitting now, pick your numbers, whatever you want to say we're trading at, below 0.1 times NAV, and we can conservatively go to 0.6, 0.7, pick your number with an environmental assessment over the next few years, forgetting the fact that the denominator NAV can also grow by leaps and bounds when you start using higher commodity prices. I think that is a that's a potentially very positive outcome for all of us as shareholders.
Okay. And last question. So when you look at the top shareholders there, obviously you mentioned on a separate slide that Rio and Mitsubishi have about a 14% all-in interest. Really good to see Rio with that kind of holding. I will say that I've seen Rio back out of a lot of copper deals due to the fact that the project isn't working according to what they need, which is a huge project, right? They're not going to get interested if it's not big. So have you, in your first 6 months as CEO, gone to the rest of this group, like Fidelity, Kopernik, Franklin, Claret, and just, kind of checked in with them to see what their thoughts are about, their ownership? And the reason I ask is because Don and I kind of look for, at least a 30% kind of ownership by people that aren't interested in selling, because of the things we saw with Marathon Gold last November, and some of these take unders, if you will.
Yeah, look, I mean, rest assured, we've talked to all is a strong word, but all shareholders we can reach. We've been out there. My joining was a catalyst to go out there. Obviously, I wanted to speak to all of our as many of our investors as I could, and I would argue we've done a good job of that. So we understand where they're seeing, how they're looking at us, and I would say, don't want to paint everyone with the same brush, but I would say by and large, everyone seems to get what we have, and understand the value opportunity. So I think we have the trust of our shareholder base. Obviously, there's always people that need to buy and sell, so you're always kind of working around the margins. But I think the core of our shareholder base understands the scarcity value of what we have. They want to see us progress. We're not eager to have any kind of exit conversations off the valuations that we're at right now. We took that dilution. We tried to raise $25 million in the spring. We ended up with 50 some odd. And we made sure we took enough. It's always disruptive to raise equity. There's the discount, there's the noise. But we took a number that got us to hopefully a very, very meaningful catalyst. We're perfectly comfortable taking us all the way there. And if that's what we need to do to get the proper type of valuation that this project demands, then we'll do it. If we get stopped along the way because it's in the best interest of shareholders, then so be it. But I mean, what doesn't factor on this page, John, is we do have large, very loyal, high net worth type investors that own big blocks, bigger than in some cases, the people on the top of this page, maybe not Rio, but bigger than most of the others. So within a handful of calls, within an afternoon of calls, we've got a very loyal shareholder base that absolutely sees the value opportunity and understands that we've kind of, after years of preserving value, we're kind of in the next phase of our existence.
Great answer. Don, we've got time for maybe one or two questions, so I'll pass it to you.
Yeah, so one, John's actually kind of went into kind of the area that I'm interested in, and that is kind of your insider holdings. You mentioned the high net worth investors. So for me, the only risk with your company is opportunity risk. In other words, right now it's fairly easy for investors to get exposure to big upside. For instance, like GDX, GDXJ, Newmont, Agnico Eagle, those stocks are all going to go up, 100 to 200% if gold goes to 3,000, which I think is going to happen. So you're kind of a copper play, so people are investing for you. But as far as opportunity cost goes, the one thing that can you put his face? Can you put both of our faces on the screen by any chance, John, so we can see each other?
Yeah, I'm gonna stop sharing. That might help here, guys.
Oh
Okay.
yeah. So we can talk to each other.
Yeah.
So I
How's that?
that works. And you can see me, I can see you. So yeah, for me, the only risk of your company is opportunity cost. So what I mean by opportunity cost is, so if I buy your stock right now and your company, it goes up a little bit, let's say it goes up 100 million to 300 million, which is a 50% move. And then you sell, you're only going to sell with a 30% to a 50% premium because the capex is so massive. Nobody's, it's the capex is $2.8 billion. And you're right, only a major can do that. But if a major comes in, a major's not going to pay more than 50% premium, I don't think, right? So it's going to be somewhere 30 to 50. So for me, that's kind of my risk. That is that I'm only going to get, 100 to 200% return. It's kind of the maximum upside, if you will, unless some things change. But if you sell, but the best case scenario, and that is what I want you to answer is, your board, your high net worth, how they're looking at this. If you keep 30%, if your company keeps 30% of this project, 50% would be ideal, right? But if you kept 30%, like you said, you talked about $1 billion in free cash flow the first 2 years, which I think it could be even higher because I think copper prices are going to start rocketing higher next year. So if you kept 30%, I mean, it's $300 million in free cash flow at 5x, that's $1.5 billion valuation. So you have this massive upside if you keep 30% or more. So this is the big question, right? So you have the high net worth people to basically say, we're not for sale, but you can have, if you want 70%, you can have that all day long. So how are you and the board approaching that strategy?
Look, it's a good thought. It's a good point, Don. I mean, look, the first thing I would say is we see the value opportunity that you see. I mean, these things are incredibly hard to come by, especially in good jurisdiction. Like the world, unfortunately, every year you scratch countries off the list in terms of places you should operate, you think you can operate. So we see the value opportunity. We're not, just to be clear, we don't have a for sale sign on the company. We know the ultimate outcome is we're not the folks to build and operate this mine. How things transition over time, what part we might be able to play in a minority situation, I think all that's up for debate. And I think it's just going to come down to what maximizes value for shareholders, of which we as management and the board are significant shareholders. First thing I did when I stepped in is, I bought a pretty meaningful $3 million stake in the company. So, and we'll continue to grow that over time, have grown that already. So we get it. Didn't join the company, didn't make that investment. I'm not the CEO of this company, Don, for a quick flip or a small win. Ultimately, we're not always in control of what happens to us. But the fact that we have the balance sheet that we have, the fact that we have the strength and shareholder base that we have, does afford us, the ability to take this project as far as we think we can continue to create value. And so that's hopefully answers your question. Like we see a lot of the same things you do. Ultimately, I don't have a crystal ball as to how the outcome necessarily ends. I will say we do know that, there's a short list of these types of projects. Ours matters. It matters to not just us. It matters to Rio Tinto. It matters to Mitsubishi Materials, and it matters to people beyond them. So, not going to have a preconceived notion about the ending, but know that we have a lot of work to do and a lot of value to create. Personally, I think, again, back to what I said earlier, when we raised that money in the spring, the message to investors was to a person, like, this is not a quarter by quarter stock. You don't expect this story to change quarter by quarter. If we have the money to get to our meaningful catalysts, there's a massive lift hopefully for you. And so buy us the time to get to where we need to get to. And when we get there, we think not only will we have de-risked the project from a permitting perspective, but we think that the outlook for copper and gold, the scarcity value of these projects closer to permitting in good jurisdictions is going to be extremely high. So that's where we're focused on getting. And again, we'll only kind of deviate from that if it's in shareholders' best interest.
I have one more question, but before I ask it, you said that you want to maximize value for shareholders, but I kind of hear you kind of talking about something that isn't the best value for shareholders, and what's not the best value for shareholders is selling it. And so you should come out and flat out say that, because it's not the best value. Let me finish. It's not the best value for shareholders, because if you sell it to a major, that major is not really going to have much upside. It just isn't. So the only value shareholders are going to get is a premium, which is not. They're not getting the future. They're not getting the future. They're not holding what you own. So that's my point. And so now I'm not an investor in big copper projects, but a lot of people are watching this so I'm trying to flesh out info for them. But I would have FOMO. Personal FOMO, if you told me that the board recognizes that the value for shareholders is to maintain a piece of this project going forward. If you flat out said that, I would be excited as a copper. If you told me we're going to keep 30% at least, because you can do that. As long as you have the insider holders that are basically not selling, because I could give you example after example. If they have a minimum price, we're not selling this thing. I'll give you an example. Free Gold Ventures, they're not selling that for $50 in the ground. It's not for sale. So but they're selling the whole thing. But you could do the exact same thing and say, look, we're keeping 30% of this project. Okay, so that's not really a question, but you can reply to it. My question is, when will you be construction ready?
Yeah, so I'll touch on the first one first, but look, I think we're saying a lot of the same things, except the differentiating factor I would say to you is I agree. Big companies aren't necessarily in the habit of bailing out small companies, paying them top dollar if they don't have to. People pay as much as they feel they need to win the day, right? I've spent all my career in the M&A space. I think the differentiating factor on that scenario is, Don, we want the baseline to be much, much higher. The baseline before we ever have those types of conversations, if we have those types of conversations. But I think so that's one of the differentiating factors. And I'm not dismissing the opportunity that you mentioned. I just wouldn't say today that we have one, we're going to pigeonhole ourselves into one path only. I think ultimately we're going to, I don't have a crystal ball. I don't know what we look like 2 years from now or 3 years from now. But we'll continue to look at ourselves in the mirror and say, what's the best thing for shareholders today may not necessarily be the best thing for shareholders 2 or 3 years from now. Depends what we look like. But I think overall, I agree with, I think we're saying a lot of the same things. In terms of I think, how'd you phrase when it would be
construction ready? Yeah.
Yeah. So look, we have, I won't mince words about it. Permitting in Canada is long, and it can be long. We're kind of headlong into it. But the good thing about that is once you do permit a mine in Canada, you get to keep it. And it's a big project. So these big projects also take their time to kind of evolve. You can't rush them, nor should you try. So when we look at this, this is an early next decade type producer, and whether that's 2020, 2032 or 33 or 31, that remains to be seen, but it's an early next decade type producer. And as I said earlier, when you look at big copper gold porphyries or big porphyries in general, just big projects, unless there's a shovel in the ground somewhere that I don't know about, there's not a lot of other things that haven't already come into play that will come in much before that. And on that, when you think about the sector, it's done a pretty good job of responding to higher prices and pretty good job in terms of supply, new supply. We've seen things like Ivanhoe Mines come from nowhere to where it's at. QB2 is almost done. There have been, unfortunately, Cobre Panama came and then went again. We'll see if it comes back online, but there's been a response. Beyond that next wave into the next leg of copper price positivity that I absolutely believe in is harder to see and pinpoint. So that's, I think, positive for us, and I think underscores the scarcity value that we've talked about in a couple of different ways.
John, I know you're out of time, but I got a quick follow-up question for him. So
Sure.
I think that a 30% JV would be fabulous for shareholders, absolutely fabulous. So why aren't you are you currently trying to pursue that type of a deal today?
No, I'd say we're not openly trying to pursue any type of deal today, to be honest, Don. I mean, I think any conversation we have today, for instance, if we want to have that conversation with somebody today, they're going to look at us and say, well, you're a $300 million company, so let's have that conversation. It's the same conversation that you had from a premium and a takeover perspective. No one's going to bail us out just out of the kindness of their heart. So yeah,
30% JV has nothing to do with money. It's just a deal.
Yeah, but still, I mean, people look at what they have to contribute to that, and again, so why is someone going to give us 30% of a project and then spend all the money today when we haven't permitted it? So all that to say is we aren't looking for any specific type of transaction today, period. What we're focused on is unlocking the value through the assessment phase, through the permitting phase.
Okay. All right,
then
thank you.
in the future, what happens, I don't want to, as I said, pigeonhole ourselves into any one path, but all those things will be open. But right now, it would be premature for us to have those conversations, because regardless of what you think about the fundamental value, we are who we are, and today our scorecard says we're a $300 million company, so that's how people are going to approach us in any kind of transaction structure. So our focus is on changing that, and when we feel like we've if and when we feel like we've substantially changed that, then we can have those types of conversations. That said, open book, we talk to people all the time. I want to make sure that both institutionally and corporately, people understand our project, and this is one of the rare scenarios in my 20-year career, which is pretty much all mining M&A, where the more you look at a project, the more you like it. It's usually the reverse. Any type of deep diligence I've ever done or been involved with, the second you start pulling away, at the onion, it gets worse. You're lucky if the resource isn't impacted by 15 to 20% minimum. This is one of the few instances in my career where the more people look at it, the better they like it technically. So that's our focus, is just making sure that people understand our project.
All right. Thanks for being on.
Oh,
yeah, thanks, Sandeep. We appreciate you coming on today, and hopefully we can get an update from you in 2025. Yeah, we have to sign off here because Don and I are hosting something else.
Okay, perfect. No, don't mean to keep you. Thanks for your time. Good chatting, and yeah, we'll look to update to you whenever you're ready.
Great.
Okay.
Thanks, Sandeep.
Bye now.
Bye-bye. So Don, we have to cut it short here because we've got that other event. But for those of you that are interested in seeing Don and I speak once again in October, that's the 20th through the 22nd down in Fort Lauderdale at the Four Seasons. That will be my contact info in the show notes, or you can just go to www.topshelf-partners.com and go to the registration there on the homepage. Don, I don't have any time for feedback right now because I've got to jump on this thing to co-host it. So why don't we talk maybe next time about your thoughts on Western copper and gold?
We can talk about it next month.
Yeah, cool. Okay, great. Thanks a lot, everyone.
Bye-bye.
Talk to you soon.